study material. In that study material also, at the end, after the board exams MCQs, in continuation, we have these MCQs of sample paper. Now, what I have observed while preparing for these MCQs is that they are a bit tricky. So today's session will be very important. All of you sit with the pen and notebook and you have to solve those examples. Which are the important points which are twisted and asked, and where you may go wrong in board exams. That also I'll be guiding you in the current session. So let's start the session without wasting much of the time. Okay. In your study material, all of you have a look at question number 120. Yesterday we solved till 119. So today we continue further with 120th question. Okay. A partner's capital account was credited with 80,000 during the year. It was credited with 80,000 during the year. Which of the following can be the possibility for such a credit in his capital account? Now, which things will go in the credit side of partner's capital account? Okay. Very first, opening balance. Yes, opening balance does come on the credit side. But mind well, here what is given to you? During the year. If you proceed with the answer option A without reading option B, C and D in exams, you will make a mistake. So opening balance will come on the credit side of partner's capital account, but it doesn't come during the year. It comes in the beginning of the year. If during the year it is credited with 80,000, it cannot be because of opening balance. Opening balance comes on the credit side. C in the loss. $1,25,000 is the loss of the firm. In that, 5:3:2, 2 by 10. So 12,500 into 2. 25,000 is the loss which C has to bear. Now, if 25,000 of loss C has to bear it, then what is the total deficiency which A and B have to bear? 45,000 guaranteed to C, 25,000 loss of C which A and B have to bear, 70,000 is the total loss which A and B have to bear. So now if you come over here, 70,000 answer matches in two situations. 43,750, 26,250, 35,35. But because they have to bear the loss equally, I repeat, because they have to bear the loss equally, what would that answer be? Equal to 35,000 and 35,000. Is this clear to every one of you? Equally, if you distribute 70,000 between A and B, the deficiency amount, then equally means half and half, 1:1 ratio. How much will be the loss of each of the partner? 35,000. Sorry, not loss, rather deficiency. So what deficiency A and B have to bear? 35. So this is an important question. It is asked in sample paper of this year, and trick here is what? Tricky things here is, first of all, since July you have started the business, July to March, the guaranteed amount you have to calculate for only 9 months. Secondly, only guarantee is not the deficiency. Because there is a loss, share of C in that loss will also be a part of deficiency. So deficiency will include guaranteed amount for 9 months plus share of C in the loss. Keep this in mind, every one of you. Okay, very good question. Let's go with the next one. Pali Limited offered 2 lakh shares of rupees 10 each at a premium of rupees 2 per share. Applications were received for 1,95,000 shares. You can say it's under subscription. Okay, under subscription means we have to go with what we have received. So all entries we are supposed to calculate, amounts, entries and everything we are supposed to pass with 1,95,000 shares only, which were duly allotted. The amount payable was rupees 3 on application, including out of this 3 rupees, 1 rupees is of premium. So can I say face value will be remaining 5 rupees? Since 1 rupee is of premium, face value will be remaining 5 rupees. Now 6 rupees on allotment, including 1 of premium. I'm sorry, not 5. 4 rupees. 2 rupees, sorry. Out of 3, 1 is premium, so 3 minus 1. face value, amount towards the face value of application will be 2 rupees. Same way, 6 of allotment includes 1 of premium. So in allotment, the face value will be 5 and balance on call. Now 2 rupees with application towards the face value, 5 rupees with allotment. So 2 plus 5, 7. So can I say rupees 3 is towards the call? Okay. Balance rupees 3 will be towards the call. 2 plus 5, 7, 7 plus 3, 10. Manoj holding 6,000 shares failed to pay. He failed to pay allotment money and his shares were immediately forfeited. Means when is the forfeiture done? After allotment. When is the forfeiture done? After allotment. Okay, when is the forfeiture done? After allotment. Are you all clear with this? Out of the forfeited shares, forfeited are 6,000. 4,000 shares were reissued at rupees 11 per share, means at premium. Fully paid. As fully paid means you have to compare it with 10 rupees, 1 is premium. The amount of capital reserve. What is the formula I have given you for capital reserve? Yesterday also, in the last lecture also, we did one question. What is the formula for capital reserve? Amount forfeited minus discount into number of shares reissued. Let us do that. Okay, how will we find the amount of capital reserve? Amount forfeited or amount paid. Amount forfeited or amount paid minus discount multiplied by number of shares reissued. Now over here, amount forfeited or paid is how much? Let us find that. Here it is given 6,000 shares. 6,000 shares. See, once again I am highlighting this. Failed to pay allotment money. Failed to pay allotment means what is paid is only application. What amount is paid is only application. How much of application money is paid? Not 3. Towards the face value 2. When we consider share forfeiture and capital reserve, we have to take the amount only towards the face value. So what is the amount paid or forfeited towards the face value? Only application. Allotment he did not pay. Only application he paid, which is 2 rupees towards the face value. Okay. So what is this amount I'll take? 2 rupees is what is paid by him. And minus discount. Can you all see reissue is done at premium? 11 means discount is not there. Less than 10 would be a discount. So discount here is 0. Discount here is 0. And into number of shares reissued are how many? 4,000. Number of shares reissued are 4,000. If I multiply this with 4,000, 2 minus 0 is 2, 2 into 4,000, then what is the amount of profit that will transfer to capital reserve? 8,000. 8,000 means what is the correct option? Option C, 8,000. This is the correct option. Okay. I hope everyone is clear with this. Optional question asked in the sample paper. Praful Limited forfeited 15,000 shares of 20 each. Now face value is 20. Okay, face value is 20. On which rupees 8 including premium of 2 was paid. Let's read the question, then we analyze what is to be done. Out of these, 13,000 shares were reissued at rupees 19 per share as fully paid. Determine the amount of share forfeited's balance. Now, all of you understand this. What is share forfeited's balance? Whatever shares we reissue, I repeat, whatever shares we reissue, with that, the share forfeiture account gets closed. Whatever shares we reissue, with that number of shares, the forfeiture account gets closed. What will remain in the balance of this share forfeited account is only the amount forfeited towards non-reissued shares. what amount will remain here is amount forfeited towards non reissued shares. Okay, so understand the question properly. Here many people make mistake, many students make mistake. When they say determine the amount of share forfeited balance, they consider the balance is the amount which we transfer to capital reserve. That is wrong. Balance is not the amount what we transfer to capital reserve. What we transfer to capital reserve is the amount of profit on reissued shares. In share forfeiture account, what balance will remain? When you reissue the shares, with that number of shares, the share forfeiture account is going to get closed. That's why the balance goes to capital reserve and the account gets closed. Still in share forfeiture, the balance will remain only with the amount forfeited towards non-reissued shares. Now let's identify here. 15,000 shares were forfeited and 13,000 shares were reissued. So can I say that 2,000 shares are not reissued? 2,000 shares are still not reissued. Whatever is the amount forfeited for this 2,000 shares will remain as balance in share forfeited account. Now, what is the amount forfeited amount paid by the shareholder? What is the amount forfeited amount paid by the shareholder? Here, out of 20 rupees face value, 8 rupees was paid, but including premium of 2. In the previous answer also I told you, share forfeited amount forfeited is always towards the face value. So out of it, if 2 is premium, then what will be the amount towards the face value remaining? 6 rupees. 8 minus 2, 6 rupees. He has paid 6 rupees towards the face value. This is what is paid. This is what is paid. So 2,000 shares multiplied by 2,000 shares multiplied by what is amount forfeited? 6. What is the amount forfeited on non-reissued shares? 2,000 shares not reissued into 6 rupees amount paid? 12,000. That amount will remain in share forfeited accounts ledger balance. Option C is your correct answer, 12,000. Question is again tricky. I told you today the session what we are doing have tricky and twisted questions. Here students generally make a mistake of answering the amount of capital reserve. Balance in share forfeited account is not the amount of capital reserve. It is the amount which remains in share forfeiture for non-reissued shares. Out of 15, 13 reissued, 2,000 non-reissued, 6 rupees paid is forfeited. So 2,000 into 6, 12,000. Okay. Then 123rd question. Pista Limited took over the running business of Vista Limited comprising of assets rupees 45 lakhs and liabilities of rupees 7,50,000, and in consideration issued them 30,000 9% debentures of 100 each at 5% discount and a check of rupees 10 lakhs. Determine the amount of what is asked is amount of goodwill or capital reserve. So this we have seen in shares and debentures chapter, share capital as well as debentures chapter, that shares or debentures can be issued for consideration other than cash. Now when we issue the shares and debentures for consideration other than cash, how do you get that goodwill or capital reserve? You compare purchase consideration with the net assets, amount paid. If amount paid is more, purchase consideration means amount paid, you compare it with the net assets. If amount paid is more, then it is goodwill. If amount paid is less, it is capital reserve. Let's understand it over here. He purchased the business comprising of assets of 45 lakhs, liabilities of 7,50,000. So what are the net assets? Assets minus liabilities, 45 lakhs minus 7,50,000. Assets of 45 lakhs minus liabilities of 7,50,000 So can I say net assets are 37,50,000? Now we have to compare purchase consideration. If we have paid more than 37,50,000, what we are acquiring, it is goodwill. We are paying for goodwill. If we have paid less than 37,50,000, then it is our capital profit and will be transferred to capital reserve. Let's see that. What is the amount we have paid? Let's see that. We have paid in consideration. Now what we have paid in consideration? We have given them 30,000 9% debentures of 100 each at 5% discount. Now 105% discount means we have given at 95 rupees. We have given them 30,000 debentures at rupees 95. Okay, this we have given them 30,000 debentures at rupees 95. Minus, what is the purchase consideration or amount paid? Okay, either you can take amount paid, that is the purchase consideration. In form of debentures, we have paid them 30,000 debentures of rupees 95. Discount means the value of each debenture after discount of 5% in 100 will be how much? 95. 30,000 into 95 means 30,000 into 100, 30 lakhs. From that 5% discount, 5 rupees, 1,50,000 if we subtract, then you can say it is equal to 28,50,000. 30,000 into 95 is equal to 28,50,000. Plus, you all can see here, we have also given a check of rupees 10 lakh. In the form of debentures, we have paid 28,50,000. With check, we have given them 10 lakhs. So what is the total amount we are paying to them? 38,50,000. Against 37,50,000, we are paying this amount, which is 38,50,000. Are we paying more or less? We are paying more. How much more we are paying? Against 37,50,000, we are paying 38,50,000. How much more are we paying? 1 lakh. More is always paid for goodwill. More amount is always paid for goodwill. So what is the goodwill over here? 1 lakh. Option C will be your correct answer. Goodwill of 1 lakh. Okay, I hope everyone is clear with this. Next, in option a question is asked. Dawn Limited, not DON, Dawn, 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 evening. Dawn Limited purchased equipment and paid rupees 2,20,000. One more thing in the MCQs material, if there is any mistake, you make the correction. If, as far as I remember, it was 22 lakhs in the material issued by us. Make it 2,20,000. Okay, 2,20,000 by check and issued 16,000 equity shares of 10 each at 25% premium. Now you are asked what is the purchase consideration. The question asked is about purchase consideration. Okay, whatever we are paying is the purchase consideration. We have paid 2,20,000 by check. That is a part of purchase consideration. 2,20,000, like we did just now. The check paid 10 lakh. And 16,000 equity shares of 10 each at 25% premium. Now in the previous question, when debentures were issued at discount, then how did we find the amount paid in the form of debentures? By multiplying with 95. Here equity shares are issued at premium. What will be 25% premium of 10 rupees face value? 10 into 25% will be equal to rupees 2.5. Okay, it will be equal to how much amount? It will be equal to rupees 2.5. Into 25% premium will be equal to 2.5. Now 10 plus 2.5, what is the value? What is the issue price? 12.5. What is the issue price? 12.5. So 16,000 into 12.5. 2,20,000 we are paying in the form of check, plus 16,000 into 25 12.5 we pay in the form of equity shares. 16,000 into 10, 1,60,000. 16,000 into 2, 32,000. 1,60,000 plus 32, 1,92,000. 16,000 into 0.5, 8,000. 1,92,000 plus 8,000, 2 lakhs. What is 16,000 into 12.5? 2 lakhs. 2,20,000 plus 2 lakh. What is the amount we are paying to them? 4,20,000. Whatever amount we are paying is purchase consideration. Previous question also we did that. What is the amount paid as purchase consideration? 4,20,000. Option B is the correct answer. Okay. Going with the next. Bala and Lala were partners in a firm with capitals of rupees 24 lakhs and 16 lakhs. They admitted Mala as a new partner for 1/3 share, for which Mala brings rupees 20 lakhs as capital. There was investment and investment fluctuation reserve appearing in the books at rupees 2,50,000. So investment is 2,50,000. Here also I think there is some mistake. Make the corrections. In the MCQ material there was 1 0 less. Increase it. And what is investment fluctuation reserve? 50,000. Whatever I have in this video lecture is the, or in this live session are the correct figures. So wherever there are different figures in your material, you make the correction. Investment is 2,50,000. Investment fluctuation reserve is 50,000. Bala took over 40% of investments at rupees 80,000. And remaining investments were valued at rupees 1,10,000. By what amount revaluation account will be affected for the above information? Now, those who have attended my class earlier, I've been making you do one workings for investment and investment fluctuation reserve. Same workings we'll do, so we'll get the amount. One is investments column we used to make, and second column we used to make for investment fluctuation reserve. Here we always compare market value minus book value. If there is loss, we'll adjust with investment fluctuation reserve. If there is profit, we directly credit it to revaluation account. Final question asked is, what amount will be reflected in revaluation account? So in both the places we can get revaluation. Let's understand first the market value. Now Bala took over 40% of investments. Investments are 2,50,000. 40% will be 1 lakh. 2,50,000, 40%, 1 lakh. At 80,000. So market value is 80. He is taking at 80,000 means market value is 80. 40% of investments market value is 80,000 and remaining investments were valued at 1,10,000. 40% are taken by Bala. So remaining 60% investments. This remaining 60% investments value is 1,10,000. Okay. Means what are the total investments market value? 80,000 plus 1,10,000. 1,90,000 is the total market value of all the investments. Okay. How come? 40% investments taken by Bala at 80,000 and remaining 60% investments are valued at 1,10,000. So the total value of all the investments with us is 1,90,000. Now against that, the book value is 2,50,000. Investments book value is 2,50,000. Means there is a loss. Market value is less. 1,90,000 minus 2,50,000, there is a loss of 60,000. This we have to adjust with investment fluctuation reserve. To meet the loss of investments, we keep investment fluctuation reserve. Okay. What is investment fluctuation reserve? 50,000. Okay. What is investment fluctuation reserve? 50,000. From this 50,000, we will adjust the loss of this 60,000. How much is still the excess loss? 10,000. Because there is excess loss 10,000, we will debit it to revaluation account. Because there is excess loss of 10,000, we will debit it to revaluation account. Main question asks this, revaluation account will be affected for the above information. How the revaluation account will be affected? We have to debit it with the loss of 10,000. So what will be the correct answer? Debited with the loss of 10,000. Option C will be the correct answer. Next, Jay and Viru. Ay sala. Shole. Jay and Viru were in partnership sharing profits and losses in the ratio of 5:3. Their capitals were rupees 10 lakh and rupees 8 lakh respectively. The firm was also having reserves of rupees 7 lakhs. Normal rate of return is 10%. Firm made average profits of 2,30,000 for the year ended 31st March 2025 after adjustment of loss of machinery book value of rupees 2 lakhs by fire. Machinery has got destroyed by fire 2 lakh. After that loss of 2 lakh, it was 2,30,000, against which insurance company adjusted already paid a claim of 1,50,000. It was admitted. Value of goodwill is asked. Okay, value of goodwill is asked as per capitalization of super profits method. Now, what is the value of goodwill? First of all, by capitalization of super profits method. Super profits upon normal rate of return into 100. So first we need to find super profits. Normal rate of return is already given as 10%. Okay, once we get super profits, we will divide it by normal rate of return 10 multiplied by 100. Now, how do we find super profits? How do we find super profits? Actual or average profits of the firm minus normal profits. Once again, I repeat, how do we find super profits? Actual or average profits of the firm minus normal profits. Now, what are the actual or average profits of the firm? 2,30,000. However, these profits are after taking into consideration loss of machinery. Loss of machine is an abnormal loss. We are not going to face this loss every year. So when we find goodwill, we always exclude the abnormal things. Okay. So loss on sale of machinery by fire, and that too by fire, is not to be taken into consideration when we find goodwill. But this profit of 2,30,000 is after this loss. If I eliminate the loss, if I repeat, eliminate the loss, what will happen to the profit? The profit will increase. If I remove the loss, the profit will increase. Since this profit is after the loss, if I remove the loss, the profit is going to increase. By how much? Loss is not 2 lakhs. Against 2 lakhs burned by fire, insurance claim already 1,50,000 is admitted. Admitted means company is going to pay 1,50,000. Loss is only 50,000. Okay. This 50,000 of loss, if I eliminate from the profits of 2,30,000, the profits would become 2,30,000 plus 50, 2,80,000. Okay, so profits when we take, we always have to take eliminating any abnormal items. If it is an abnormal gain, then instead of adding it, you subtract, because if you remove the gain, the profit will decrease. Here there is a loss. If you remove the loss, the profit will increase. So what average profits will we take into consideration over here? 2,30,000 plus 50,000, 2,80,000 are the average profits of the company. How did we get this 2,50,000? 2 lakh of machinery is burned by fire, but insurance company is going to pay 1,50,000. So we get this 50,000. Okay, 2 lakh minus insurance claim 1,50,000. Now, how do we find the super profits? Average or actual profits minus normal profits. How do you get normal profits? Capital employed multiplied by normal rate of return. Now, what all things will be included in capital employed? Capital employed will include capitals which are 10 lakh and 8 lakh respectively of Jay and Viru. It will also include reserves. Okay, we'll add that. And that's it. Reserves will also get added. That is a part of capital employed. So what would be the capital employed? 10 lakh plus 8 lakh plus 7 lakhs, 25 lakhs. Okay. So how will you find the normal profits once again? Normal profits are equal to, you know, minus that. Capital employed multiplied by normal rate of return. Now what is capital employed? I repeat here, you all can see 10 lakhs of capital of Jay, 8 lakhs of capital of Viru, 7 lakhs of reserves. So capital employed would be equal to 10 lakhs plus 8 lakhs plus reserves of 7 lakhs. 10 plus 8, 18 plus 7, 25 lakhs multiplied by normal rate of return is 10%. 25 lakhs, 10% is 2,50,000. Now, 2,80,000 minus 2,50,000. What are the super profits? What are the super profits? 30,000. Okay. Now, what is the formula I told you for capitalization of super profits? Super profits divided by normal rate of return into 100. Super profits we got 30,000 divided by normal rate of return 10 into 100. So what will the goodwill come to? 3 lakhs. Option B. Goodwill will come to 3 lakhs. Option B, 3 lakhs is your correct answer. Okay. Going to the next. On 1st August 2024, Jerry and Tyke entered into partnership with capitals of 5 lakh each. Interest on drawings was to be charged at 6% per annum. What is the rate of interest? 6% per annum. For the year ended March 31, 2025, Tyke withdrew rupees 80,000. The drawings are rupees 80,000. Okay. Tyke has withdrew rupees 80,000. What amount of interest on drawings will be charged from Tyke? Now, tell me, every one of you, is any date of drawings given in the question? When has Tyke withdrawn this 80,000? Date. Is it given? Not given. Now, what did you study in the chapter 1? If the date of drawings are not given, then you count interest for an average period of, yes, for an average period of 6 months. If the date of drawings are not given, when is the money withdrawn, then you will count interest on drawings for an average period of 6 months. So if you go with that logic, then 80,000 into 6% interest, 4,800, and 6 months means half of 4,800. What should be your answer? 2,400. But that is wrong. My dear students, that is wrong. Understand the logic now here. Yes, if the date is not given, you do count interest on drawings for an average period of 6 months. But however, when did they enter into partnership agreement? When did they start the business? 1st August. Here, the year is not of 12 months. The year is not of 12 months because they started on 1st August. August, September, October, November, December, January, February, March. 8 months. Their business is running in this year for a period of 8 months. Now, when the date of drawings is not given, you do count for an average period of 6 months, assuming in the middle of the year, the drawings would be made on an average period. But here, because they started only in August, the average will not be 12 divided by 2, 6. It will be 8 divided by 2, 4. When the period is 8 months, the average will not be 6 months. It will be 4 months, half of 8. Assuming that you withdraw the money in between the year. So if August to March is 8 months, August, September, October, November, 4 months are over. Then 1st December is what we assume he would have withdrawn the money. So December, January, February, March. Instead of 6 months, in this question that average will be equal to 4 months. Why? Because the period is not 12 months, it is only 8 months. 12's half, normally in any question we take 6 months, but in this question 8's half will take as 4 months. I told you sample paper has tricky questions. There's another one. So how will you count interest? 80,000 into 6 by 100, and because it started in August, instead of 6 months, we'll calculate the interest for average period of 4 months. 2 zeros cancel, 4 into 3, 12, 3 into 2, 6, 800 into 2, 1600. What will be your answer? 1600, not 2400. So be careful with this in board exams. Always the date of drawing is not given doesn't mean 6 months. You need to see that in this particular question which is given to you, when does the business start? If it's a new business, if it's an old business, then you can count for 6 months. But here they are entering into partnership agreement for the first time. Again, important, tricky question. Let's take up the next one. A, B, and C were sharing profits. A, B, and C were sharing profits and losses in the ratio of 7:2:1. B died. Okay, B has died. A took over 1 by 20. Yesterday also I told you from word is very important. When they say from, directly the sacrifice or gain is given. Okay, from means directly the sacrifice or gain is given. His share and remaining share was taken over by C. Determine the new profit and loss sharing ratio. Now, because it's a question of death, A and B are going to gain. C has died, so A and B's profit will increase. So how will you find the new ratio? Old ratio plus what they gain. Let's do it. Old ratio plus what they gain. Old ratio is 7:2:1. We know A, B, and C. Okay, the old ratio is 7:2:1. 7 plus 2, 9 plus 1, 10. 7 by 10, 2 by 10, 1 by 10. B has died. D has died. So how will C has died. So how will C's share be going to A and B? A will be getting 1 by 20 from his share, clearly given. If C has died, what will A be getting? Okay, what will be the gain of A? It is directly given. How much? What will be the gain of A? How much? Directly given to you. What? 1 by 20. A took 1 by 20 from his share. Now C is getting 1 by 10. Out of that, A takes 1 by 20. How much will B take remaining? 1 by 10 minus 1 by 20. Out of 1 by 10, 1 by 20 is taken from A. What will B take the remaining? So if we do the LCM, 20. 10 into how much is 22? So 1 into 2 is 2. Repeat, 10 into 2, 21 into 2, 2 minus 1. 1 by 20. He also gets 1 by 20. He also gets 1 by 20. Gain ratio is 1:1. Now this gain we will add to get the new ratio. How will we get the new ratio? Old ratio plus gain. How will we get the new ratio? Old ratio plus gain. So what is the old ratio? 7 by 10 plus gain 1 by 20. What is the old ratio? 2 by 10 plus gain 1 by 20. Again, if we do the LCM is 20. 10 into 2 is 27 into 2, 14. Plus 1, 15 by 20. Here, 10 into 2 is 20. 2 into 2, 4. Plus 1, 5 by 20. What is the new ratio? 15:5. Can we simplify it? Yes. 5 into 3 is 15, so 3:1. Either of the options will be given to you, 15:5 or 3:1. Let's see what options are given to you. 3:2. Okay, either 15:5 or 3:1. Here the answer is 3:1. Okay. Now in option, what question is asked? Let's see. X, Y, and Z were partners sharing profits and losses in the ratio of 5:3:2. Now again, the second partner Y has retired and he gifted half of his share. Here what is the word? Now the word is not given from, of. The words from and of makes a lot of difference. Here the word given is of. He gifted half of his share to X. Okay. And how much did he give? Half of his share to X, and remaining half was taken over again, not by Z, equally by X and Z. Half straight away goes to X, and remaining half also X takes again further equally, means half, and Z takes half. Determine the new profit sharing ratio. Same kind of question. First we have to find the gain and then we have to add it. Okay, but it's between X, Y, and Z, and second partner has retired. So let's do it like this side now. This side we have already done the first option. So here we take it up. X, Y, Z. What is the old ratio before the retirement? 5:3:2. What is the old ratio before retirement? 5:3:2. 5 plus 3, 8 plus 2, 10. 5 by 10, 3 by 10, 2 by 10. Now, Y has retired. Okay, so his share will be going to X and Z. And how is it going? How is it going? He gifted half of his share to X. So what is the gift he is giving to X? Okay. What is the gain of X? Half of that. 3 by 10s, half. 3 by 20. 10 into 2, 20. 3 by 20 he gifted to X. So X is going to gain this 3 by 20. And what did we study? Remaining half equally by X and Z. What is remaining half first of all? Remaining half. If half is 3 by 20, remaining half is also going to be 3 by 20 only. Okay. So remaining half 3 by 20 equally between X and Z. Means again out of remaining 3 by 20, X will get half and Z will also get half. X will get half and Z will again get half. Okay. So 20 into 2, 40. 3 by 40 and 3 by 40. Now, X is first of all getting half of 3 by 10, that is 3 by 20. Okay. And remaining 3 by 20 is half, he again gets 3 by 40. What is the total amount X is going to gain? 3 by 20, this amount, plus 3 by 40, this amount. Half of 3 by 10, he straight away gets 3 by 20. From remaining half, again further he gets half 3 by 40. What is the total gain of X? 20 into 2, 43 into 2, 6. 6 plus 3, 9 by 40. What is the total gain of X? 6 plus 3, 9 by 40. And Y, Z is going to get only 3 by 40, this. Now this gain we have to add in the old ratio. So how will you get the new ratio? New ratio will be equal to old ratio plus gain. What is the old ratio? 5 by 10, 2 by 10, gain 9 by 40, 3 by 40. So old ratio 5 by 10 plus gain 9 by 40. Over here old ratio 2 by 10 plus gain 3 by 40. So 10 into 4 is 45 into 4 will be 20. 20 plus 9, 29 by 40. Here 10 into 4 is 40, 2 into 4 will be 8, 8 plus 3, 11 by 40. 29 is to 11 is the new ratio. Okay, this all of you can see now. 29 is to 11. 5 by 20, 5 by 10 plus gain 9 by 40, 29 by 40. 2 by 10 plus 3 by 40, 11 by 40. So if we go to here, the correct answer 29 is to 11. Here we have it. Okay, what is the correct answer? 29 is to 11 is the new ratio, old ratio plus gain. 12th question. A partner was assigned to look after the dissolution process and allowed remuneration of 15,000. Also, actual realization expenses amounted to 20,000 being paid by another partner Y. X will get remuneration of 15 for the dissolution process. He is going to undertake the entire dissolution process. And another partner Y has borne the realization expenses of 20,000. Okay. Now what is asked to you? By what amount realization account will be debited for the above mentioned information? Both the things will go to realization on the debit side. Both of these things will go to realization account on the debit side. So 15,000 plus 20,000, 40,000. 35, sorry. 15,000 plus 20,000, 35. Both the things will go on the realization debit side, 35,000.